Is that the best time frame for trading the ranging market? It's usually a common question for every new trader in the forex business. My name is Sewankambo Isma. I do welcome you back to my YouTube channel. Thank you for liking and subscribing, plus commenting. Well, in this video, we're going to look at the best range trading system that is very easy and every person can trade with. Well, first and foremost, this strategy works with all financial instruments. Let's say stocks, let's say forex, let's say indices, provided they can be traded in the 1 hour time frame. So with this, we're going to be trading it in 1 hour time frame. For those of you that literally know that apparently have been trading, and also for those that haven't been trading, what you should bear in mind should be when you're to trade this, first and foremost, before you do anything, if let's say you've opened your chart, your phones, rather your laptops, your phones, make sure you're in the 1 hour time frame. Now, this strategy is very easy. First and foremost, it works with the ranging market. A ranging market is actually a market that literally moves sideways. Remember what we said, most especially in market structure. When it comes to market structure, the market is either trending or ranging. And of course, when the market is trending, we have looked at the higher highs, higher lows. That is when it's trending upwards. When it's trending down, we've also literally looked at the lower highs and the lower lows. So mainly those are the peaks and troughs that literally make up the market structure. However, in this video, the type of market structure we're literally having here is going to be a range, and a ranging market is actually that market that moves in the sideways market movement. Now, you do not necessarily need to be good at identifying the ranges, identifying the market structure based upon the ranging markets, but then the most important thing here is going to be probably you using an indicator that is probably going to help you out onto this, which is probably going to be a Bollinger band. So a Bollinger band is going to be one of those indicators that we're going to be using when we are trading this particular strategy. Another important indicator that we're going to look at is called the stochastic. A stochastic is simply that indicator that ideally shows to us the overbought and oversold territory, or what we refer to as the extremes. So the point here is when the two indicators, when the two indicators, that is the stochastic and the Bollinger band provided in the ranging market, come to agreement at a certain point, it's then you have a decision on whether you buy the market or sell the market. Like we're going to see in this very example, when we come to our screen, we're going to look at how the stochastic works. We're going to look at how the Bollinger band works. We're going to look at the best type of would-be ranging market when it comes to the Bollinger bands. That's how they can literally identify us these particular points. Then we then certainly be having an opportunity, of course, to have that particular point whereby all of the two are agreeing to a point for us to decide on whether we should have an entry for a buy or for sell, depending on what has been prepared for this very video. If you haven't done any subscription, please do. If you haven't, or probably if you have probably subscribed already, you can always like. If you don't like, you can also probably, after liking, then share to their friends so that they also learn the best of this video. Thank you. Well, let's get onto the platform and we see certainly how the Bollinger band works. Now, what we see on our screen is basically a Bollinger band. A Bollinger band is an indicator just like any other indicator, but only that for it, it actually has two bands, whereby we have the upper band, like we can say literally here. Yes, we have the upper band, which is actually this one, and then we have the lower band. So what literally price does, price simply moves actually along these bands, okay? Where in that these bands are working as support and resistance levels. So we find it interesting, of course, when we certainly find the market that is literally ranging, whereby the upper band is working up as a resistance and the lower band is working as a support level. And every time the prices approximate to these levels, they of course appreciate the characteristics, the response of probably the support or the resistance. In other words, if they reach the resistance, we expect them to bounce off. We expect the candles, the prices to bounce off the Bollinger bands. Then, of course, when the markets when the candles reach onto the lower band, we expect the same to happen. But then this time round, they'll bounce up, going upwards. So here is an upward, and then this is a downward. Okay. So hence respecting these key levels, the support and resistance levels. So what you have to make sure is you are trading this strategy best in a ranging market, because I believe when you deploy this in the trending market, they're really not working out. So first make sure you're in a ranging market. Secondly, you will have to make sure that you are trading this particular strategy in rather ranging markets, and then make sure you're in a 1 hour time frame. Then if you're in a trending market, it's not really going to work out, believe you me. Then after looking of course at that, let's deploy probably see how our other indicator works, which is the stochastic. Now before I can reach onto the stochastic, well, for those that don't know about the stochastic is an overbought, oversold, or an extreme related oscillator. An oscillator, by oscillators usually tend to appear below the chart. The candles are above, for them they are below. They are more of a volume related kind of indicators. So that's why we get they are indicators, but then we further give them a special name, oscillators. These ones are below the chart, just as you can see. They are below our chart, and then the candles are above. Hence oscillators. Then these ones, their main importance is to show us the oversold territory. These are the oversold territory. That is, it actually ranges from 0 and 100. This is the 0, and then 100 is here, whereby the area between 0 and 20 is the oversold territory, meaning that guys or sellers have sold and they have reached to the point, to their maximum or their highest point of sell, which we call the oversold territory. And then we certainly probably also showed to us the overbought territory, meaning that guys have bought this much and they have reached to the maximum point of certainly buying, and hence the overbought territory. And then we say that between 80 and 100 is actually an overbought area. So this area, whenever market reaches that area, we know that the buyers have bought and they have reached the maximum. So therefore we expect them this time round, to sell. So it's actually literally more of a support and a resistance thing. Okay, but of course this is only applicable again when the markets are ranging. So the main important thing here is to identify a market that is in a ranging place. Then after of course having all this, let's first certainly let me wrap this, and then we can probably go to our strategy. But then before we can go to that, what you should have to know is the stochastic is made up of two lines, just as you can see, the green and the red. Usually it is a dotted and of course a solid line. The solid line is the stochastic itself. And usually for us to say that the market is probably certainly here coming to a sell, we need to first wait for the market to go in any of these areas, that is either in overbought, oversold territories. Then of course after market reaching that point, we then have to see them either crossing the 20 or the 80 levels, okay, for us to execute any trades, even though it doesn't even though we may not be looking at what we are looking at here, which is the Bollinger band, trading it with the Bollinger band, or you may in any one way be trading the stochastic with any other oscillator, any other indicator. The best point of entries are determined after the close or the crossover or the cross of the 20 and the 80 for you to certainly buy or sell the market, depending to the crossing point, whether in from the oversold territory, from the overbought territory, or from the oversold territory. So the same is applicable here. As we're using the Bollinger Bands, we have to make sure that when we are using them, we need to consider our entries based upon the two, of course, after the agreement. After the agreement, that is when, of course, we may consider our entries after the agreement, of course, after the stochastic crossing the oversold or the overbought territories, that is 20 or 80 line, as we have seen. So when I proceed on, let me deploy our strategy. You can certainly be having something of this nature if you can critically look at this market. This market is ranging by, so it's actually moving in the sideways market movement, as we can see. Not previously, maybe it was moving and here it was, but then my main interest here is, of course, when you look at this, the market came from upper band, came down, up, then down. So this market is certainly in a ranging market. By the ranging market, we are saying that if it is in the ranging market, you have to wait for the candles to come and touch either the lower band or the upper band. When it touches the lower or the upper band, then we can then say that we either have to buy or sell if we actually see the same on the stochastic, because now for this case, this is our stochastic, and we say this is the over sold territory, this is the overbought territory. So like for this case here, if you can look here, as the market approximated to this level here, it was in oversold territory, and then here we also saw that it was in oversold territory. So the two of these guys have actually admitted that the market is actually on the support, okay? That the market is actually on the support. Like let's say if I do bring the horizontal thing here, you will certainly see that by the time the market reached this point, it's when it's actually triggered a buy order. So the two of these are agreeing to the same point that we should buy. So when you buy, probably this is what happened. And again, when the market reached up, like I told you, it delayed. It's not that whenever it approximates to the upper or the lower rather band that you should buy or you should sell. You need to first wait till when the stochastics tells you the same as to what the indicator is telling to you. That's the Bollinger Band. Then, of course, after it, some people, the mistake they do, like what happened here. Like what happened here, this guy was in an upper, was on the topper range, rather band. And of course, what we expected here was a sell, but certainly you're not supposed to sell, not until this market here, the stochastic here, shows you that it has really entirely crossed the 20, rather the 80 here for you to sell. The same happens here. Just because this thing has reached the lower band, it doesn't mean that you should necessarily buy, even though this guy is showing you that it's going in for a buy. What you usually do is we actually just make sure that we wait for this guy to come and cross the 20. The moment it crosses the 20, that's when we are supposed to buy. So the strategy is actually very simple. We're using a 1 hour time frame. We're using the Bollinger Band with 2 standard deviation and of course the middle line, which is the moving average of 20 periods. And then we're using also the stochastic. We're going to leave the default settings, and we have to make sure that we are trading in 1 hour time frame. And besides that, we need to know, what we need to know is we should of course trade this with any instrument, any tradable instrument. But what you should bear in mind should be that when you're trading it, make sure you're in a range, so it doesn't work when the market is trending. Okay, and then the other most important thing that I should at least point at before I can, of course, sign out should be that, of course, when the market reaches the upper band, let's say, and also the stochastic has entered the overbought territory, it doesn't mean that you should immediately there and then sell. You need to wait for that point whereby the stochastic now comes out. When the stochastic comes out, it's the stochastic that should give you the entry point. And then when you enter, you have to make sure that the stop loss, if you're at sell, the stop loss should, when it actually comes out of the, or crosses the 80, then you should make sure that that's where your entry would be. And then the stop loss would slightly be above the upper band. And then the take profit should be you have to make sure that the take profit should not cross the other band or the lower band. Okay, so it should be within the same boundaries. So thank you for watching this video. Hope you've really learned from this. In case of anything, please comment or contact us with the contacts below this video. The details of this video, the contacts are there, and all other related information that you may be required is actually below this video. Thank you so much. Please like, share, and subscribe. Thank you. I do love you all. Bye bye.